Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing more green arrows around the world this morning as the rally continues into Fed Day. We have Europe up, Asia climbing as well, and our futures up about 4 to 5 handles. So, Scott, what do you think we can expect from the Fed today at 2 p.m.? Could they say anything to shake us?
At this point, I don't think people are expecting them to, and at this point, there's like some kind of interesting setup here. We've come a long way. We've talked about this rally, I think, starting 2 years ago, the road to 1700, and then the rally that started in November, and then more recently, the rally that started 3 weeks back at 1655 as we sold off because of the government shutdown or the debt ceiling. So with that being said, we've been up in a straight line heading into Fed Day. So sometimes what they'll do is they'll accentuate the move and then bring us back below a prior high, and then that could mean a little bit of a rest. And if you look here at the chart, you will see that it's been a tremendous move from the November lows all the way up, tested here, tested around there, broke a little bit below, here, and there were three types of pullbacks that we've seen, about 4.5%. This was, I believe, also on a Fed day, that May 22nd outside day. Then this was when they did the no taper, broke above and then came back below. And now look where we are, We had the red dog reversal at 1655, Pode moved to the upside, commitment broke above 1729, didn't fade there, and then extended. So with that being said, we're up above the prior high. In order for any kind of technical signal for a rest, they would probably squeeze everyone a little bit more, then close back below, and then maybe we retest the 8 day or even come back and retest this prior breakout. But for right now, it's been a one-way train up, and hopefully people have been watching the morning call or using the off the charts or in the private rooms, because we've been talking about all the different setups in all the different sectors with all the different earnings plays, and rarely have we had, short of the brain.
Right. Well, speaking of all those different setups and earnings plays, besides the Fed, earnings continue to roll in, providing all different kinds of opportunities. And we've seen Google and Amazon, for instance, hold up well, whereas on the flip side, Amazon and Netflix have not.
Right. So if you look at the different type of trades, first things first, Google came out, it had a 7-month base, and Google then exploded from that. So let's go to Google. Here you go. This was the base that we were talking about, and the reason why I took calls and straight calls, I'm like, you know what? People are pretty negative around Google. If it breaks above 927, it could be that next $1,000 stock, which we talked about here. I think we talked about that right here before it needed more time. But anyway, big gap up. Nice continuation here, then it came back and retested. Now it's opening probably above 1,040. I have a call spread on that I will be capped out at, but overall looks like it could head towards 1,050. And like you said with Amazon, Amazon's similar to Google, where you had a gap up, they didn't sell it lower, and then it digested, and now above this, what is that, 363, we could at least see a retest of the higher of 368 and maybe even higher. So, ultimately, the earnings plays have been good for guys that are trying to do option strategies, and then even, for trades thereafter.
Right, and last night we also saw LinkedIn and Baidu. LinkedIn got hit, whereas Baidu was up. But then we also have Facebook after the close today. What do you think we can garner about Facebook's report?
Well, people might be a little worried because they're looking at LinkedIn, which had a huge move from about 90 to 250, and it had a strong report, but it's now looked at like it was enough. I think for LinkedIn, you take a quick look here, you'll see that it just wasn't enough to break out and go. It tried a few times after hours and just was sold down. So at this point, see if the composure changes a little bit. Remember here, when it closed at the highs, it gapped lower, was in the penalty box for a while before going again. So here, going to gap lower, see if it holds 235. If it holds 235, I think that's really in stride. If it doesn't hold 235, at some point we might see a test of this, 210, 220 area, which I think at that point could be opportunity. As far as Facebook's concerned, it's had a tremendous run. We talked about this cup and handle pattern until we were blue in the face before it triggered. And then last quarter was that trigger. But that was a different time. Look where it was. Look at the accumulation pattern. From here, big run, all the way up to almost 55, which we were talking about as the measured move. So now, it seems like people are a little skeptical, and rightly so. Look at the move it's had since earnings. From there, breakout, this was, buy area 1, buy area 2, buy area 3, and then it retested. So from here, we've trickled lower. right around 50, I started accumulating some calls, just a small amount, because Facebook's been so good to us. I'm not going to bet against it. So I figured if they come out and they impress again, there is a small possibility that it would get above this prior high and extend a little bit, especially with with Twitter next week. So at this point, I'm going to be in a little bit of a call spread. Nothing huge, just to participate in case. And if it doesn't, come through when we open up lower, I'll take a look at here, which is 45, and then I'll take another look down here, which would be around 42, and then you have the moving average all the way down there. So, I'd just be a little careful. It is extended, but I just wouldn't have just short on the brain there.
All right. Well, beyond earnings, there have been opportunities in different sectors. Looks like 3D printing stocks could be setting up again, led by 3D Systems. Gained another 4.5% yesterday. So what do you see here?
I see a stock that's definitely tricky to trade because it's stops and goes and it's very loose and sometimes there's a spread. But if you stuck with it and put it in the drawer, and try to give it a little space, look where it is now. Okay, they tried to bring it lower, they squeezed it, closed it strong, and now above 60 it can continue. This is somewhat of a new stock. It's been only around for a few years, and just goes to show you that you go to your monthly chart, new issues. Actually, really, 1991. I didn't even know it was around that far. But anyway, look how much time it took, I guess, before it took off, and now at this particular point, it's still underway above the moving averages and something you could stay with. But I wouldn't chase it because it is a little sloppy.
Right. But as we've heard more about 3D Systems, we've also heard more about names in the group like Stratasys, which looks like it could be getting tight. Do you see a potential breakout here? Well,
this one also did a little bit of an outside day yesterday where it broke below with Triple D, came back above. You look at the chart just for a trade, you'll see here's where it tried to break below support and then it closed in the highs. So I would say, above this high, it's in the game for new highs. I would not be putting any type of size into this because, again, where the market's extended. But overall, it's hanging around. It's flagging here. Some would say this is a bull flag. Here's your pull. There's your flag. So above 110, it can continue, and those are the prior highs right there.
How about X1? Is this one in the game as well? It's been perking up for a little bit.
Yeah, this one, it's had like flashes of greatness where it was a very successful IPO. It went quickly and then it broke its trend. And if you look here at the chart, you will see, here's why we talk about the beauty of or the art of the first day. This one closed strong the first day and gave you another day before coming back and retesting. Then from there, look at the size of this move within the first year, almost a triple. And then this level broke right here, which was a spot to say, okay, let me get out of the way. And from there, it's been a heck of a correction. Okay, here it woke back up, where it came back on the map with a day one has gone sideways. So it's trying to regroup. It's going to need some, I would say, some volume and some potency here. So, but above 53.35, there could be a trade to at least retest these moving averages and get back on track to where it broke down from. But ultimately, if you sold here and didn't get caught in this mess, put it back on its radar, especially if the other names continue to act well.
All right, well, coming up, we're going to go in the trenches with casino stocks, which are on the radar for some upside momentum. But first, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and going in the trenches with casino stocks, which are on our radar for some upside momentum here. Las Vegas Sands has been hovering around the 8-day, so does this look like it's setting up for some potential higher prices?
It's setting up for an add-on trade. Back in September when we talked about them showing relative strength to the pullback in August, that was when you could have put on your core situation. And you looked at LVS, it looked really set up, and look at the size of the move it had from this area, from this nice consolidation, boom. Okay, so now, I wouldn't say it's the same type of trade when it broke out because it's a lot higher, but here you are consolidating still above the 21-day, reversed a little bit yesterday. So if the market wants to continue to extend, you look for some of these type of trades just a little bit smaller for some cash flow. So if it wants to continue and make new highs on the year, it's going to have to start getting above this 72 area. So yesterday was a start, and now see if it can continue. Kind of like what happened here where you had your breakout move, pulled back, then started to go again. So, here's the trend. It's intact. It looks good. but you have to just stay with it, and that's what traders are looking for, just trying to stay with trades that continue.
Right. So would you then prefer to play a stock maybe like MGM, which closed the day up about 1.3% yesterday, had a nice bounce? Do you think we could get some continuation in there today?
That's the only type of trades we're looking for. A lot of these core scenarios that we talked about with MGM, we talked about putting it in the drawer earlier in the year, probably around $12. And now here we are at 20, so it's hard to get aggressive up here, but it doesn't mean the move's over. This was the last setup that wound up breaking above it, and then look at this trend above the 8 and 21 day. So here, it just started to break a little bit below. So it's showing some signs of fatigue. So I would just maybe trade versus this, and if it were to get through 21, it can go again. This is like a C-level trade. If you're still in it, stay in it, but as far as a trade, I don't see that much here. It's just something that you could trim and trail, and if it were to break this area and the market corrected, maybe put a stop in right around there, but then make sure you have some kind of strategy to get back in if it does get a little faulty there.
All right, well, what do you see then with a stock like Wynn, which has been holding above the 21-day?
It's like that's where traders are having a little trouble, because so many of these things have had such big moves. And this one, again, the core trade is out of the way. Now the question is, can you make additional cash flow? If you look at Wynn, you will see that the time for that core trade was pretty much the same time right around LVS, when over the summer the market pulled in, if you remember, in August, and you know what? Wynn didn't, and then it broke out, and then it's kind of giving you a few trades along the way. This was your last tradable setup when it pulled into the 21-day and went. So here it is pulling to the 21-day again. Now the question is, will it have enough power to make new highs? So with that being said, if it's going to, it's got to get above 169 first. So just a micro tactical trade there.
All right, well, let's do some quick hits here. Let's check in on Apple, since earnings has not been holding up well, couldn't hold the gap open. Would you say a rest is due here?
Yeah, I think that it was 100 points higher from where it was last quarter. So they had a solid quarter. Some people focused on the margins, whatever. So we said, keep it simple. If Apple could stay above 532 to 534, chances are momentum could stay. If it gaps up and doesn't hold it, get out of the way. That's why at around 9:35, I tweeted, I am selling my 530 calls because the options expire Friday. I'm not taking a chance here. They were at 8, and now I think they're at 2. So you always have a little bit of a chance to get out of some things and salvage a trade. So from here, you look at the chart, you will see like here's where it didn't hold. It didn't hold this breakout area and gave you a pretty gross outside day. Outside days typically lead to a little bit more downside. So with that being said, the pivot you have here is right there. Okay, this is a 514.54. It's up $2-3 pre-market with the futures. Maybe there's a short trade here. If the futures go and it shows relative weakness, maybe you short a little bit, trades below this low, and then gets to the 21-day. And then at the 21-day, I would say look for an opportunity for some type of, maybe reversal to the upside. It doesn't have to happen there. It could also happen where the prior breakout happened here at 492. So this is what we know. You have yesterday's low, you have the 21-day, and you have another prior breakout. We'll see what kind of opportunity presents itself with Apple if it heads to this area and they sell the up open.
All right, so then what do you make of a stock like Netflix then, which has not been holding up well since earnings either?
Well, Netflix is a good example of how to do it, because they sold the earnings on Netflix. Then you had a little bit more downside follow through. But if you tried to be extra cute and stay short yesterday through that pivot of 311, you turned a good trade into a bad trade. And if you were looking for a re-entry in Netflix because perhaps you sold your stock into the earnings or whatnot, yesterday you had the opportunity. So you look here at Netflix. This was the big gap up that was sold. Here it tried to hang around and then had some continuation, so it traded below that low. And then yesterday we talked about this being a pivot. 311. Could it get below 311.81 and hit the 50-day? Well, it almost hit the 50-day, went below, came back above. That's a classic red dog reversal. Now we'll see if it has enough strength to start retracing this move, and that move doesn't start till 337.
And we mentioned Green Mountain Coffee yesterday, which has been perking up a little bit as buyers have been stepping in at these lower levels. Do you like it here?
I think it has a day one. Sometimes a day one leads to a day two. It's heavily shorted. It's gotten crushed. If you got stopped out, it's worth a look. I'm actually long some from yesterday. You look at the chart here, you will see, it looked really good if you remember. Oh, sorry, up here. And then if you used your proper tactical mechanisms to get out of the way when it either broke this trend line or broke this upper area, you then have the luxury of trying it again down here. It's still a laggard trade. It's kind of weak, but it's poking its head up. So with that being said, for a tactical trade, maybe it comes up and retests, 67.50.
All right, and how about SanDisk? It triggered the listed buy price from off the charts yesterday, so map out this one for us.
This one looks strong. It was actually downgraded this morning by Merrill Lynch, so we'll see if it could absorb it. It was at highs, so it's unfortunate because traders like to take home stocks at highs. You look at the chart here, it closed on the highs, so it's down a little bit. I don't know if it's going to make it fall apart, but I would say, know your time frame here. If it stays above 69, you're fine. If it were to break below 69, you know what, maybe you see some more downside, so just figure out what you want to do there.
All right, well, big day. Like we've said, we've got the Fed at 2 p.m. We've got more earnings. Facebook will take center stage after the close. We'll also have General Motors, Visa. What will you be focusing on? Or will you be just having to focus on everything because there's so much out there?
I'm just going to continue to manage positions and try and make some cash flow and tack on to the month. I think a lot of traders had a really good month. We've had a lot of good earnings action. It's been a heck of a move in the market since early October at 16.55. So if you didn't buy 16.55 or you didn't buy 17.29, I don't think you have the luxury, or you should check out your process if you're buying this gap open, at 17.75. But it also doesn't mean that you could just blindly short it. So with that said, on Fed days, sometimes it's interesting where they accentuate a move to get every short squeezed, have some chasers come in, and then they reverse it. Doesn't say it has to happen, but it could. And if we see those signs, then maybe we get a little bit of a rest, which I think the bulls and bears would both welcome, because this 3-week move has been an elevator ride straight up.
Well, with that said, happy trading, everyone. Have a great day.